Imagine driving through a quiet New Jersey suburb on a Sunday afternoon, the kind of place where the streets are calm, the trees lean overhead, and everything feels slow and steady. Suddenly, you pass a for sale sign, and immediately you wonder, is this house going to spark yet another bidding war, or is it going to sit unsold for weeks? That exact tension captures where the New Jersey housing market stands in 2025. Not in a bubble, but on a very delicate balance, where small changes in interest rates, inventory, or buyer demand could swing things either way. Let's dive deeper into what's really going on and what it means, whether you're investing, buying with your family, or looking for a place just for yourself. Inventory and supply. More listings, but still tight. One of the biggest changes this year is a substantial increase in active listings. According to recent reports, active listings in New Jersey have climbed significantly. Proactive Property Management +2, Robert DeFalco Realty +2. But despite this surge, supply remains tight, with only about 2.7 to 3.2 months of inventory, depending on the report. Nick Christopher NJ Realtor +2, Robert DeFalco Realty +2, that's well below the 4-6 months typically viewed as a balanced market. Nick Christopher NJ Realtor. So yes, there are more houses now than a year ago, but not nearly enough to totally calm the market. The extra supply gives buyers more options, but it hasn't flattened prices or completely swung power away from sellers. Prices. Still holding with some regional differences, home prices in New Jersey remain strong. In fact, several sources show median home prices hovering in the mid-dollar 500,000s. Robert DeFalco Realty. In some high-demand counties, like Monmouth, the median is even higher, around $735,000 for certain home types. Axria.com. Meanwhile, in more affordable parts of the state, like South Jersey, you're seeing medians closer to $430,000. Alexborelty.com. Interestingly, certain segments are growing faster than others. According to recent NJ reports, townhouses and condos have increased in value year over year by 4.5%, while adult communities rose by about 2.9%. Proactive property management. This unevenness underscores how localized and segmented the market is right now. At the same time, affordability is becoming a bigger challenge. The affordability index for single-family homes in New Jersey has dropped, meaning that even though buyers want homes, a smaller share of households can comfortably afford the median-priced property. Proactive property management. Days on market and seller behavior. How long are homes sticking around? That depends on location, but statewide, there's been a modest rise in the time homes spend on the market. According to Explore New Jersey, the average is now around 43 days, up from faster sales during peak bidding war seasons. Explore New Jersey and other data. New Jersey Realtors reported about 3.2 months of supply in one of their November 2025 updates. Robert DeFalco Realty. That extra time isn't because demand is dead. It's because buyers are getting more selective, and sellers are starting to use more flexible tactics. According to a real estate report, many sellers are now offering things like closing cost credits, mortgage rate buydowns, and even bonus furniture or concessions in some cases. Proactive property management. That's a big shift from the name your price, take the offer days of the frenzied seller's market. Interest rates. The wild-card mortgage rates remain the biggest emotional lever in this entire market. Many New Jersey buyers are still grappling with rates in the 6.57% range, which is significantly higher than the rock-bottom rates of earlier years. Team Zool +2 and JGIP.com +2. This makes housing much more expensive on a monthly basis, even if the sticker price hasn't dropped. Experts are divided on where rates will go. Some, like DJ10 Hoev, predict that rates could gradually ease to 6.5% by the end of 2025, assuming bond yields cooperate. Tenhoevadvisory.com. But for now, the elevated rate environment is keeping some potential buyers on the sidelines. If rates do come down, even modestly, it could unlock a lot of pent-up demand, particularly among first-time buyers and families who were waiting for affordability to improve. Why New Jersey remains special. NYC spillover and structural constraints. New Jersey's housing story isn't just about supply and rates. Geography and policy play a big role. Northern New Jersey is tightly linked to New York City. For many buyers, NJ isn't a fallback, it's a commuter play. Towns like Montclair, Clifton, Maplewood, and Jersey City continue to attract people who work in or want the lifestyle of NYC, but don't want the full cost or chaos of living in the city. AlexProRealty.com plus one. That spillover effect gives demand a kind of built-in resilience. But there's a structural problem too. Building in New Jersey is hard. Land is scarce in many places, zoning is strict, and new construction is expensive and slow. Axria.com. That means even if demand surges again, supply isn't likely to boom overnight. This constrained pipeline amplifies whatever pressure exists in the market. Segmented impacts. Families versus singles versus investors. For families, if you're buying with your family, especially if schools and commute matter, New Jersey still offers incredible value. You're often competing for single-family houses in desirable school districts or commuter towns. That said, affordability remains a real concern. High interest rates plus steep property taxes mean you need to budget carefully. But if you're pre-approved, ready to move quickly, and willing to consider slightly less popular towns, you could come out ahead. For singles/first-time buyers, singles and first-time buyers often look at more affordable options. Condos, townhomes, or smaller single-family homes. That's where things are a little more favorable right now. Inventory has grown, and sellers are more flexible. If you've got decent credit and some down payment ready, this could be an opportune moment to lock in a rate or make an offer on a property you might have missed in peak frenzy years. For investors, investors have a complex but potentially rewarding landscape right now. On one hand, limited supply, strong demand in commuter towns, and persistent housing constraints make New Jersey appealing for long-term rental plays or value-add flips. On the other hand, financing is more expensive, and investor competition could stiffen, especially if rates don't fall soon. That said, if you run conservative cash flow models, assume slower rent growth, and are patient, NJ could be a great place to deploy capital. Moreover, some investor-focused listings are offering more aggressive concessions, which can improve returns. Risks and opportunities. What to watch over the next 12–18 months. Major risks: rates stay high or rise. If mortgage rates remain in the high sixes or go up, some buyers could be priced out again or delay purchases. Too much inventory from investor sell-off. If investors start offloading because financing gets tougher or rents slow, you could see local supply spike, especially in flip-friendly towns. Affordability crisis deepens for families. For buyers who rely on wage growth or stable jobs, high rates plus high property taxes equals real strain. Policy risk: changes in zoning laws, tax policy, or state housing mandates, especially under new leadership, could dramatically reshape the market. Key opportunities: selective buying. Buyers can now be choosier. This isn't a blind bidding war era. If you target the right zip codes and the right home type, you may find value. Rate buydowns with sellers offering concessions. There's potential to negotiate mortgage rate buydowns or other incentives. Long-term investing for patient investors. NJ's long-term supply constraints and commuter demand remain a compelling bet. New construction plays. Developers who can navigate zoning and build efficiently may have outsized opportunity, especially in high-demand commuter markets. Final take. What should you do based on who you are? If you're a family buyer, focus on strong school districts or commuter towns, get pre-approved, and move fast when you find the right place, but don't over-leverage. If you're a single or first-time buyer, use the growing inventory to your advantage. Look at condos or townhomes and negotiate aggressively. If you're an investor, run conservative models, lean into long-term plays, and don't assume instant exit profits. This market rewards patience. New Jersey's housing market in 2025 is not a bubble ready to pop nor a free-for-all boom. It's balancing. Every major force, mortgage rates, inventory, investor behavior, commuter demand, and the state's structural limits, is tugging in different directions. Understanding these dynamics is not just useful, it's essential if you want to make a smart move, whether you're buying, selling, or investing. If you want me to walk you through your zip code, your county, or even specific neighborhoods with likely future trends, I can do that. Just tell me where you're looking and I'll break it down.